Good morning, everybody. Mark, you got something happening there. There you go. Good morning, Mr. Putrino.
Hey, how's it going?
Excellent. If I'd bought AMC yesterday.
Well, this thing is about as easy as money as you can make in the trading world is this GameStop, because this thing is going to reverse just like it did yesterday and just like it did every time it busts higher. And this thing is trading at like $67 a share. So kind of where we topped out here. Yeah, I mean, this is just, I guess it's good for some people because you take the other side of that trade. I mean, I would take the other side of this trade all day.
Yeah.
I mean, it's like, let's see what the market cap on this is. Market capitalization 9.3 billion, and they earn a little bit. Price to earnings ratio 823. Okay. Wow. Yeah. I mean, I would be thinking about buying some puts on this, maybe out of like a week or two, maybe a little more, because maybe the frenzy will push it higher, but this thing is going to come back to earth. There's no way it could stay up here.
No.
It's really overbought, obviously, but eventually all these meme traders they're going to just run out of they're going to just run out of money to spend, and then at that point everything comes crashing down. And then what's going on over in the AMC world?
And baby's ripping too.
Where is this one trading?
1048.
Yeah, now this is trading pretty much right at this former resistance level here. See, support, resistance. So this is let's see what this is. This line is 1120 and it's trading at 1024. So if it hasn't gotten above that yet, I don't think that it will. What are some of the other ones?
Palantir was considered a meme stock, but I don't think it is. I mean, what was the other one? There was Bed Bath and Beyond. There was I don't know, chat. What other ones do we have?
Yeah, it's not really doing. Palantir's not doing that much this morning.
But it's sitting right above that gap, which is nice.
Yeah. Boy, this is funny.
I think Bed Bath and Beyond is gone. They were bought by Overstock.
Yeah, it's called like Beyond or something.
Yeah.
Beyond.
Oh, and BlackBerry.
Yeah, so this one's trading up a little bit. And then what's BlackBerry?
There you go.
This is up to 384. So this is getting close to where it'll probably find some resistance, like right around there. See where it's, see this like former peak right there?
Tupperware too. I forgot about it.
So it's trading. Tupperware is one of them?
Yeah, Tupperware too. And Kodak as well. I don't know if Kodak got caught in. I think that was when they were talking about making COVID pills at Kodak that it shot up.
Well, here's the thing, right? All these meme traders are running this thing up, this GameStop up, and these other ones. GameStop is the most though. But when these people, wasn't it at 70 before?
Yeah, it's already going to come down. It'll probably be at 30 before the open.
It's down $9 since I said we should buy puts on it.
Yeah.
But here's the way this works, right? Forget future prospects, forget earnings, forget EBITDAs. Let's think about market psychology. When people are very bullish, that's a bearish thing. Because if the vast majority of investors are bullish, what do? They invest their funds. And eventually they run out of these funds and the market runs out of buyers. So there's a famous story about Joe Kennedy, which I like to tell. Joe Kennedy was the patriarch of the. Look at this. Now it's down to 59. I think it's like 6 as we speak. So anyway, the story with Joe Kennedy, he was like a Wall Street operator back in the 20s, and he was walking to work, and the famous story is that he got a shoe shine, and the shoe shine boy gave him tips on the market, and he went, he sold everything, and he shorted everything, and then the market crashed. Right. So the moral to the story is when people who don't typically buy stocks are buying stocks, they're the last in the line. They're the last in the food chain, so to speak. Um, so now let's fast forward to now, right when the market peaked at in December of 21. I had this young plumber come by my house who had a leaky pipe, and he was I guess he's about 30, and he saw my screens and he asked me what I did and so forth. And he told me that he had two friends that had left their jobs to become full-time day traders. So this is like the modern version, the Mark Putrino version of the Joe Kennedy story, because that was exactly at the very peak of the market. And when people that don't buy stocks, typically, like these two guys, one was a plumber and one was an HVAC guy, um, they're the last in the line. Markets can only go up if there are buyers. You need a buyer. If there's not enough supply or sellers, the buyers are forced to pay higher prices. They're going to have to be willing to pay premiums to get the sellers off of the sidelines. And that's what drives the market up. But when that buying runs out and there's no one left to buy, well, then the only way it can go is down. And this is what happens in bubbles. Like it was happened in the internet bubble, and a lot of people say, well, you can't compare what's going on in AI to what happened in the internet bubble because these companies really earn money, and a lot of those companies didn't, which is true. But even the good companies like Cisco and Intel, when the crash came, I mean, they were down more than 80%. So it's just the principle of sentiment. When we get excessive sentiment one way or the other, bullish or bearish, this is what we call a contrarian signal. Wow. So this thing is down $13 already. Mm-hmm. Yeah, it's going to. So here's what's going to happen. All these people are going to get crushed, and then they're going to blame it on market makers or hedge funds. So hello, Di. Hello, everyone else. So this is history repeating itself again. And I don't usually give recommendations, but I would say it's probably a pretty safe bet to be on the short side of this, meaning, being the put buyer. All right, so let's go see what's going on with the real stocks. We got the CPI today, which is probably going to be higher than expected. Now, I know that Biden is supposed to speak about the economy today. So he either knows that the CPI report is going to be less than expected, or he's just stupid. And I would go with the latter. But if the CPI comes in less than expected, man, then something is up.
Gosh. Yeah, I don't know if you heard or not, but did you hear that they're withholding intelligence from Israel on the location of the Hamas people because they don't want them?
What a freaking disgrace, man.
Sick.
He's such a baby. It's so infantile. It's like the dude comes into office and everything Donald Trump did, he just reverses. Doesn't stop and think, well, maybe this was a good idea. Maybe that was a good idea. Just reverses everything. Just like such a baby. And now it's like, oh, you're not going to listen to us? I'm not going to give you information. You're not going to let me be the quarterback. I'm going to take my ball and go home.
That's right.
So it's really disgraceful. All right. Anyway, so S&P, not surprising, right? We're kind of stalling out at resistance up here. And this is what happens when markets get to former peaks. They tend to run into resistance. And this is also, excuse me, a psychological thing, because people that bought up here who are underwater ever since are now taking advantage of this recent rally to try to get out of their positions at break even. So really nothing happened yesterday. This is about as close to being unchanged as you could be, just up 1 basis point. And this morning, just up a few basis points. And so that's pretty quiet over there. And then we're going to check out our technology sector. This looks pretty flat this morning too. Not really doing anything. And then the financial sector. Let's see this. Yeah, so this is going to be where there's going to be some trades ideas here, I think, if this market kind of reverses. This is your, yeah, I mean, it's not surprising that it's going to reverse because, again, this is another thing where we're going to run into resistance at a former resistance level. So this goes back to here. This is when the plumbers were at my house, like right here, right before we had this big move lower. So this is your classic bearish engulfing pattern here, or that's what the Japanese candlestick name would be for it. And going back to psychology, we know that the psychology of these markets hasn't changed, right? That's why we see these same patterns on these charts that people have been looking at for literally hundreds, if not thousands of years. This bearish engulfing pattern is candlestick charting, and candlesticks came from Japan in the 1500s. The rice traders used to use them, and that's where futures markets developed from. Farming. You know, a farmer has a big crop and they want to lock in the price for future delivery. So that's where the futures markets came from. And there are people that talk about how the Egyptians farmers had some kind of a futures market. So anyway, what is going on here? Well, yesterday morning, it looked like it was going to be another up day because look where the close was. Look where the open was. So this open was at a higher price than the prior day's close. So in the morning, you would have said, oh, it's going to be another up day. But by the close, the sellers had pushed it all the way back down. And what's kind of important is they pushed it through the prior day's opening price. There tends to be the most trading on the open and the close, so that's where there tends to be support and resistance. I mean, look at this even here. See where yesterday's close was?
Mm-hmm.
Like exactly at the same level as this day's close was. So there were a lot of people who bought and sold on the close, and then it went up. So a lot of the people that sold say, "Oh, I made a mistake. If it gets back to my price, I'm gonna buy my shares back." So the close here was 41.67, and then the open over here was 41.95. So I mean, just 20 cents away from each other. So we'll have to see if there's some follow through here, but I think it's probably the most important sector to watch in the market right now is these financials. Different sectors are kind of in control of the market at different times. And if you can go check out the SPY ETF fact sheet. And just look at the holdings. And this is a good thing to know because being a successful trader of this type of trading is knowing what to watch at different times because different things come in and out of importance. Like, for example, let's go look at Microsoft. Now, this here is an important thing to watch, right? Microsoft is like kind of pinned up against this resistance. So yesterday it rallied, and where did it hit resistance? Exactly where the support was. So here's an example that we see all the time in markets, a very common thing, of what was support converting into resistance. And this is because of buyer's remorse. This is a different manifestation than running into resistance at a former peak. This is running into resistance at a former support level. But it's the same principle. There's people who bought back here who think they made a mistake when the price goes lower. And they say, if this gets back up to my price, I'm going to get out of this at break even. So remorseful buyers placing sell orders at the level that was previously support creates resistance there. And then the next thing to notice is, we got to the resistance and then we sold off. Well, selling off of resistance is a very common thing. And the reason why this happens is because we have to think, like, what is resistance? Well, it's this large group of sellers. So some of the sellers start to sense that there are other sellers coming into the market, which is what happens around resistance levels. And they notice the price isn't going up anymore. And they start to get concerned that they're going to miss out. So they start to undercut each other because they know that the buyers are going to go to whoever is willing to sell at the lowest price. So someone might be like, all right, well, I want to sell at 419, but then they see a 418.75 offer pop up and they're like, uh-oh. So they reduce and other people see that and it ends up becoming this like a snowball effect type thing here. So this is one of the reasons why we look for things that are at support or resistance, because they tend to move. The support is the opposite. It's the buyers start to notice or sense that other buyers are coming into the market, and they know the sellers are going to go to whoever is willing to pay the highest price. So then the buyers start to outbid each other, and it becomes like a bidding war. So you get to resistance, you tend to sell off. You get to support, you tend to rally. Now, in a situation like this, we could see here, the support broke back here. Now we're going back into April. And what does that mean when the support breaks? All right. It's not just a symbolic term. It tells us that the people who created the support with their buy orders are out of the way. They might have finished their orders. They might have canceled their orders. But regardless, they're not there anymore. So we fell right through it. Then we had the little retest here and here. And a lot of times this happens before something goes lower. What was support makes that conversion, I call it the conversion process, the conversion into resistance. So we sold off, then this former support level was resistance for 2 days. And then finally, the sellers just overpower the buyers and just knock the thing lower. So knowing where these price levels are, in my opinion, it's like having a map to the market. Your map to profits, I guess you could say here. Apple kind of just hanging in there, going sideways. I'm kind of curious as to where is GameStop broken 50 yet. Let's see here. Oh, no, back up to 60.
Yeah, I've got one for you that I've never seen you look at. It's called Well Tower, WELL.
Well Health? Oh, no,
Yep.
sorry.
It's Well Tower.
This one here?
Yep, that one there. Oh, that's on
Italy.
Yeah, that's on our exchange. I'm sorry. Well, that's why you've never looked at it. Go ahead.
Let's see. This is a REIT. So this is the I don't know what's up with this chart, but it's a foreign company. So let's go look at our REIT.
Yeah, sorry about that.
That's right. All right. So this is the Real Estate Investment Trust ETF. Kind of interesting action here, but just something doesn't look right about this. Yeah, there we go. All right. So again, what do we have here? We stalled out at resistance. We're at the former support level. So this morning, it's pretty strong this morning. I don't really know why. I saw this one, oh God, I think it was in Fort Worth, that this office building that was listed for like 120 million. I think it's the tallest building in Fort Worth. Or maybe it was Austin. But I think it was listed for like $120 million, and it just went into foreclosure and sold for like 12 million. So the commercial real estate market is kind of in big trouble, and I guess we've kind of seen some of the ramifications in it with some of the banks going under. But anyway, all that aside, we still see our same stuff here, right? What was support becomes resistance. And we've been watching the utility sector for a reversal here, because utilities have been flying. And the reason why is because people are buying the electric utilities, because there's this kind of narrative going around, excuse me a second, that these companies are going to benefit because of artificial intelligence, because artificial intelligence requires so much energy. So that's the thought that's driving this higher. So this is actually kind of a weird thing that you're seeing the AI trade showing up in the utility sector over here. But all that being said, we're very overbought. And if we break this trend line and start to head lower, then we could start looking at some of these ideas within the utility sector that are really stretched out the most. Like, whoops. No, this isn't it. Let's see. So we can, just like we can look at what's in the S&P, we can look at what's in the utility sector by looking at the utility sector fact sheet over here. And even though some of these ones are not electric utilities, just the way these markets work, they're all kind of correlated. Public Service Enterprise Group. Let me go to this here. I forget which one. NRG, that's what it is. Yeah, so I mean, so this would be a possible play for a reversal here when it happens. Now let's think about this. See, this up 61% this year. Pretty amazing. So a lot of times people buy utilities because they want the income, they want the dividend. So we got the CPI today and we got the PPI tomorrow. So let's think about this. If it's higher than expected, that could put pressure on these utility stocks, because if it's higher than expected, you can make the inference that interest rates are going to be higher, which means people would sell their utility stocks to go buy bonds. So that's one thing we can do. And I think that it's really important to understand this here, which I've been kind of talking about, is that we're going into this big inflation spiral, man. And it's going to not be pretty, because it's already not pretty. And people are freaking out, and it's just going to get worse. So look at this, right? We look at this ISM report here, every month comes out. And it used to be called the PMI, Purchasing Managers Index. But services is now officially in contraction because it's below 50. But the important thing I want to show you here is these price increases. So in 1 month, okay, copper is up 5.8, or not copper, sorry. In 1 month, the prices of the service sector are up 5.8%. I mean, that's 1 month. And in the industrial sector, the prices are up 5.1%. And if you look at some of these commodities, these things are flying. Like, look at copper. This is sometimes a good indication of inflation. I mean, this is like, look at that. This is going nuts. And then you got these big moves higher recently, like in a lot of these agriculturals, like wheat. Here's our wheat market. I mean, look at that. Soy, corn, they're all up. And this hasn't trickled over yet into the grocery store. But it will. My guess is probably like towards the end of the summer. Here's corn. So a lot of these agricultural commodities are up more than 20% in just a matter of like 2 months. So this is obviously quite inflationary. And, we're going to start seeing it pretty soon. A way you could protect yourself against inflation is there's this ETF that some of our people have used that tracks the certain commodity index. So if inflation really gets out of control, this would be a good place to be. And this was the whole inflation thing that started in early 22, right? So remember all the talk about inflation then. Mm-hmm. So just keep this on the radar screen. I don't know if I will get in there yet, but it's really, it's really a shame, because this is all self-induced by stupid ass policy, And
absolutely.
It's not like the 70s where it was like, OPEC. I mean, I guess you could say, well, when Nixon took the country off the dollar, or the gold standard or whatever, that caused OPEC to react. But this is all self-induced because of too much spending. And the scary thing is they're just talking about spending more and more. Every time we send money over to Ukraine, or pay off some college kid to defy the Supreme Court and pay off their student loans in the vain attempt to get them to vote, that's money that's printed out of thin air. It's not like they take it out of the cash register somewhere. And if we look over here at our debt clock, this is our total U.S. debt, over $100 trillion now. This is the national debt. But if you take the total debt, $100 trillion. And really what is kind of hard to deal with, I guess, is no one's really talking about doing anything about it except for like Trump. Trump's talking about bringing more oil on the market, and that'll certainly help. But they just need to kind of really, really cut a lot of this inefficiency. The Social Security age needs to get raised. I mean, is this ever going to happen? I don't know.
Well,
Yeah,
somebody's got to be strong, a strong leader and do it. I mean, listen, when they have to start deporting all these people, that's going to cost us billions of dollars to send all these people back home. So, I mean, I don't think we're at the end of it at all. I don't think they can stop the spending.
yeah, that's a good point. But in the long run, it could save money. I mean, New York City has, I think I saw like last year, spent more money on the immigrant problem than on the police department and the fire department and the sanitation department put together.
Yeah.
So it's really just an insanely stupid policy. And one of the things you're seeing is that the African American vote is starting to really kind of move in Trump's direction. And that's because, they open the border and they take all these illegal immigrants and where do they bring them? They dump them off in the cities where they can take resources from the African American people that are there legally. And I've seen it. People talk about it in New York. People talk about it in Chicago. But I think it's just, in Biden's mind, he thinks he's going to get the Democrats, I think, take the African American vote for granted.
Absolutely.
So if someone said to him, hey, this is going to make people get mad, he's probably like, yeah, whatever. They're going to vote for us anyway. Big deal. He doesn't care.
Yeah.
So
Hey, would you look at Celsius,
amazing how,
please?
like, everything he does ends up being the opposite. Should be like
would like you to look at Celsius. CELH.
It's like the Seinfeld episode where George just does everything the opposite of what he would usually do.
Mm-hmm.
CELH.
And I found that well again. It is on the New York Stock Exchange. It's trading at 99.48.
I don't know. There's really nothing going on here this morning. It's really just trading down about 21 basis points. Interesting thing here, right? This is our psychological level here, 99.62. All right, close enough to 100. But when people like nice round levels, so something gets to $100, they say I'm going to sell. So if this thing continues to move higher, there's probably going to be some resistance up here. Here's a former peak around 96. So I mean, it's got some upside. I don't see anything that looks like it's going to be resistance until we get up to like about here. These former peaks. But I mean, I don't know enough about it to know if it's going to trade to an all-time high.
DJT, please. We haven't looked at old Trumpster's thing in a while.
All right, it's kind of not moving either. Like a stock like this, this is a little bit different than like your typical trading because this is going to be completely influenced by news in a lot of ways. I mean, the technicals are still going to matter, but I would think that this is just going to be an election play. And if it looks like Trump's going to win, people are probably going to buy it. And then my guess is this becomes like a buy on the rumor, sell on the news kind of a thing. They buy it ahead of the election, and then the election comes along, and if Trump wins, then people sell it. So if you've heard the expression buy on the rumor, sell on the news, or like the crowded trade, well, this goes back to our same thing we were talking about with GameStop, the crowded trade, buy on the rumor, sell on the news. Say people anticipate this news coming out. Like just say in this situation, people anticipate if Trump wins the election, this thing is going to take off. So everyone who wants to buy it buys it before the election. Then say the election comes along and Trump wins and it doesn't go up because everyone who wanted to buy it has already bought it. The market has run out of buyers. And people start to look around and say, wow, this thing isn't acting the way I thought it would. So I'm going to sell it to try to get out before at break even here or whatever. But guess what? They have a hard time finding buyers because the buyers are full. If you're in the institutional world, most portfolios are weighted by percentage weight. So you might take a portfolio that has 20 stocks in it, and you put 5% in each position, right? So you go out there and you buy, you got a 5% position, and that's it. You're full. That position is full. You don't want to buy anymore because you're at the position size that you want to be. So if you're full and someone calls you up and says, "Hey, I got this block of DJT for sale. You interested?" It's like, nah, we got a full position here, so we're not doing anything.
Mark, PMI came in at 0.05. It was forecast at 0.3 or 0.5. It was forecast at 4.3. So it was higher than expected. And then you've got a really good question here from Avi. He'd like you to explain something to me.
Wholesale prices rose 0.5% in April, more than expected. Yeah, I mean, this is not a surprise based on what I was just showing you with that, what happened in the services. Look at this. AMC. Now, ask yourself something. The people at AMC just sold stock. So did they have an offering because they think the price is going to go higher? No. They sell because they think this is a really good price to get out here or to offer. What they're doing is they're offering new shares out to the public. They figure the stock is high enough here. We think this is they're essentially saying we think this is a good place to sell. But these people that are trading these things like AMC and GameStop, they don't, they're not rational. They're just like, it's really more like just gambling.
So you've got a couple of questions here from Avi that are really good.
To pay the domestic national debt, the government will have to inject money into the market. Well, I would think that would increase the national debt because there's more money they're just generating from thin air. I've thought a lot about this whole problem with the debt, and I can't figure out a way out of it unless, like you said, someone's got to come in and really be, slash and burn, raise Social Security. When Social Security was invented, most people didn't live long enough to get it.
Well, Mark, we have redundant agency on top of redundant agency too. I'm sorry to cut you off. Go ahead.
Now people live to be 100 years old. Theoretically, you could spend as much time in retirement as you did working these days. And retirement wasn't even a concept that people had until like the early 1900s. No one retired. People worked till the day they dropped dead, except for the really wealthy people. Anyway, it doesn't really look like that much of an effect here. I guess we're down a tiny bit. But not surprisingly, more inflation. The PPI is tomorrow. That I would suspect is probably going to be higher as well. So we shall see. All right. Anyway, let's go look at GameStop before I get going.
We got Powell speaking at 10 a.m. today, guys. Don't forget
that?
about that. Powell speaks at 10 a.m. this morning.
Oh, great. Oh, we can all rest easy now.
Mm-hmm.
Yeah, so I guess we're not surprised here. All right. Anyway, I think that this GameStop is going to go down eventually. Will it get jacked up a couple more times? Maybe. But I think it's a very reasonable idea to maybe buy some out-of-the-money puts that are out a week or two. Because this thing could just come and tumbling right back in like a house of cards. All right, Maru, you're welcome. Yeah, so that's it. All right, so if anyone has any questions, please let me know. Thanks for being here.
Absolutely, we really do enjoy your time that you spend with us.
I just want to look at the headlines in the journal. I think there's right in my town here. I got to take a picture of it to show you guys. I just think it says it all when it comes to government efficiency. If you go down to the little post office, it says there's a sign. It says lunch hour 12 to 1:30.
Oh yeah. No, here in ours it's two.
It's like,
It's
wait a
12 to
second, that's
2:30
an
at
hour and
our
a
post
half.
office.
That's not an hour.
It's 2.5
You're
at our
welcome, man.
post office here in Florida.
But I'm just saying, the fact that they got a sign that says lunch hour is an hour and a half. It's like, it's just pretty, it's pretty amazing. The world has gone cuckoo for copper. Yeah, this is what we were talking about. This is another scary sign that inflation is really starting to heat
The
up.
copper's in everything.
Yeah, and I mean, it's not like it's the why I'm concerned is because not only is it going up, but the pace of the going up is accelerating. And again, we looked at wheat and copper and so forth. I mean, this stuff is all. I don't think this has hit the market yet. I think that this is going to start to trickle through into the grocery stores over the next couple months. And what's sticks out to me about this is that the food prices are so high already. What's going to happen when all this stuff, starts to hit the market? Because it's obviously just going to exacerbate it. So pretty scary. Let's, I guess let's just kind of hope for the best here. But I saw like how many Americans live paycheck to paycheck, and
Oh, it's a
it's not just
ridiculous
like poor
number.
people. It's people that like have had things well, but things change. Like I'll give you an example. My former doctor, he's a pretty young guy, probably about my age, and when he first became a doctor, he made some pretty nice coin. And he was telling me, like the last time I was there, that he lives paycheck to paycheck. I mean, granted, he has like a nice house and everything, but he's got no savings, and it's because the malpractice insurance has gotten so high. Like I think there's a real shortage of. I'm not 100% sure, but I've heard people say that there's a real shortage of around where I live of OBGYNs, which is kind of strange considering like Stanford Hospital is part of the Yale Hospital network. But I guess the insurance is just so high that people don't want to take the risk anymore. It's just not worth it.
That's
So
understandable. Will you
it's
look at the
kind of,
shop real quick?
like I read this book about Evel Knievel, and the famous thing where he crashes at Caesar's Palace,
Yeah.
where like he breaks all his bones, and I think it was on Wild World of Sports, and that's
Yeah.
like what made him famous. So he was in the hospital for um like I don't know, like 10 months or whatever, and the bill was like $800 or something. Like back then you didn't need health insurance because you could afford stuff. And what's funny about that is he that was that was actually an ingenious marketing plan of his. He had all his friends call up Caesar's Palace and say, "Hey, I heard Evel Knievel is going to be performing there," and they had no idea who he was, so they were like, "We don't know what you're talking about." Finally, Evel Knievel called them up and said, "I'm Evel Knievel, and you've been telling everyone that I'm going to perform there, and I'm going to sue you unless you let me come perform." And that's when he did the performance, and that's what made him famous.
Wow.
All right, so I would say looking at this, Avi, the trend is lower. I would be looking for some support right down around here. And the reason why, so I'm going to say this is 55.50. Back in my day, that's what we used to call 55 and a half. But look back here. See how it was a support, a resistance level here, and then right there it became support. It opened on this day, it went down to there, and then bounced back up. So I would think that there's good chance that there's going to be some support down there again around 55 and a half. So I mean, if I was short this, that would be my trading target. I don't really do long term stuff because that's just not what I do. So I don't really know where it's going to be in a year or two. But that's where I would. It's basically pretty much unchanged in the pre market. That's where I would look for support. One thing before I go, I just want to show you on the GameStop chart the characteristic of this stock. Like every stock has like a different personality, and because the meme traders, this thing tends to really overreact and then reverse. So look back here on this particular day. So it opened way higher than the prior day's close, got all the way up to here, but by the close, it was all the way back down, and then it was the beginning of a downtrend. Here, you had this big move for whatever this news was, opened up here, just reversed and went into a downtrend. Here you have the opposite on the downside. People selling, overreaction, reverses right away and goes into an uptrend. There was one here too, yeah. So there's your overreaction. And then yesterday, we closed well off the highs, and now we're up at 66. And eventually this frenzy will run out. Maybe when the market opens. I guess Robinhood and all those places you can trade in the pre-market, because that's who's trading this right now. This isn't institutions. No institution's going to buy a stock like this that has a PE of like 800 in the midst of all this. I mean, I wouldn't think so. I don't know how you could justify it from a buy and hold point of view. Yeah, I guess if you're a prop trader, meaning like a prop trader, that's the part of the market. It's typically hedge funds, where what they do is they just trade capital. Basically, the fund gives the trader money to trade, and the trader trades it. And if they do a good job, they keep a percentage of their profit. So that's how those guys are compensated. So they're not technically day traders because they don't need to close out at the end of the day. But a lot of them have like a kind of a day trading strategy. And when I worked for Steve Cohen, that's really what he was. I mean, you wouldn't say he was a day trader because he didn't need to close out at the end of the day, but he was most of the positions, I think, if I remember right, would be closed out. But anyway, I think this makes sense to watch for the reversal. And I think, some out of the money puts that are out a couple weeks might be a good idea, because maybe this thing gets jacked up again. The Roaring Kitty comes out. Roaring Kitty is probably selling this stuff right now. He probably loaded up the boat on Friday, and now he's like selling it as he's telling people to buy, which is not an unusual thing on Wall Street. But but anyway, yeah. So eventually the buyers are going to just run out of money. They're going to be taking losses. They're going to sell, and it's just going to come right back to earth. All right, everyone. Thank you so much, and I guess we will see you all tomorrow.
Thanks for spending the morning with us, guys. We'll see you later.